Well, it's official. Rivian has followed suit and is adopting the Tesla charging network as of 2024. Individuals that own Rivians will eventually and slowly start getting access to Tesla charging networks. And models built in 2025 and after will contain the North American standard for charging. This is really no surprise, as just like I tweeted this morning, Tesla's really the only North American EV company to figure out how to make a profitable electric vehicle, leaving the Lucids, the Fords, the GMs, the Rivians, the Polestars even to, well, figure out profitability. And you'll see what I mean with Polestar, because you might think they're gross margin positive, but there's some accounting tricks that probably leave them gross margin negative. Let's talk about it. Faraday Futures, who remembers Faraday Futures? Faraday Futures was like, part of the whole EV hype rally. And the idea was that, they were going to make modern life more convenient, was the suggestion. And we were going to get these incredible hypercars and these phenomenal cars that you could pre-order. It was kind of like a Lucid without the Saudi backing. And unfortunately, they are now, substantially a penny stock. And this is a company that just filed to basically raise more financing, basically raise more money, as well as do a massive reverse stock split. And we could probably see the signs of bankruptcy if we go through some of their filings here. Let's look here. Faraday Futures, Investor Relations. Let's pull up one of their latest SEC filings, not to include their shelf filing Friday after the market closed for more financing, as well as delaying deliveries. Let's pull up one of their latest. Okay, here we go. Share tab. And let's just see what we have. There we go. Okay, good. So let's take a quick look here at this report. This is Faraday Futures. And what do we have here if we can see any indications of pain? So, oh yes, no revenues. Okay, right. So the income statement is no income. We'll go there in just a moment. So what do we have? We have cash flow of negative $103 million for 3 months. Wow. Okay. And then you have another 17 here. So you've got about negative $120 million of free cash flow. So you're burning $120 million of free cash flow in 3 months. And then on the assets sheet, oh, that makes sense. Yes. You have $31 million of cash and you're burning $120 million a quarter, which means you're burning $30 million in about 1/4 of a quarter, which means you're burning all of the cash you have in about 22 days. So as of March 31st, this company had 22 days of cash. Of course, they do have deposits that they can burn through. Got plant, property, and equipment here that keeps growing. Oh, don't mind the bills we have to pay. Just another $130 million of bills we have to pay, along with some longer-term liabilities over here. And notes payable, 92 mil, whatever. Okay, point is, company's out of cash, but at least they're making money, right? Oh, no. Operating expenses, there literally is no income. They're not selling anything yet. You literally have no income and cost of goods sold. You just have R&D and G&A and sales and marketing and loss on disposal of plant, property, and equipment. That doesn't sound good. Why are you disposing $3.7 million of plant, property, and equipment? Well, because things just aren't going well. And then, $83 million loss here in Q1 2023. So maybe not a surprise the stock is doing a reverse stock split, and now they're raising money. And the stock's down like another 34% in pre-market, going from a whole 44 cents down to 34 cents. But now what does that signal for us? Well, it signals that just because you have these momentum rallies, don't expect companies not to come in and dilute the crap out of you. And this is one of the biggest warnings that I regularly give when we have these momentum rallies in dead penny stocks. What happens is, look at this, Faraday Futures was sitting down at 14 cents. And so what happened? Well, everyone realized, oh, wow, the bull market might have legs. So what do people do? They start pumping penny stocks. So this sucker goes from 15 cents to as high as about 45 cents. It basically 3x's as a stupid penny stock. And a terrible company with no fundamentals, with no income, not a dime of income, burning $120 million of cash flow a quarter. It's insane. It's $40 million a month. Evaporate. Could you imagine evaporating $40 million a month? That's nuts. Anyway, so then what happens? It rallies a little bit. And what does the company do? Oh, now that we've meme rallied a little bit, why don't we dump on the normies who are buying our crap stock? And that's exactly what they did. To make them feel better, we'll do a reverse stock split, and then we'll raise more money and dilute the shareholders even more. So, yeah. That tells you all you need to know about Faraday futures. It's unfortunate. It's unfortunate. You want businesses to be able to succeed. You don't want to see failure, but you just happen to get it. The markets will have to weed out the companies that deserve to fail, and unfortunately, it's going to be a lot of the auto manufacturers. Other than the ones that have massive support from probably ICE vehicles. To some extent, maybe GGPI from Volkswagen, because they have such a ICE vehicle, support via their partnership with VW. You've got, or even Geely. You've got, obviously, with the support of GM's EV money-losing business. They don't expect to be profitable until like 2028, 27 or 28, one of those. Actually, maybe even not even this decade, they reported. That's, their ICE vehicle business is basically supporting the losses in EVs. Same thing with Ford or Rivian. They're all losing money. Nobody's figured out how to make an electric vehicle and actually make money, except for Tesla. And that should be really scary if you think about that. I mean, for a moment, just think about it. What are the popular electric vehicles? Well, Tesla, Rivian, Lucid to some extent, the Ford Mach-E series, some of the GM vehicles. None of them can make money. Let's see for a moment GGPI. Polestar. Right, they have a different ticker now. It's now PSNY. Let's for a moment look at PSNY. PSNY, Investor Relations. Let's see if they've at least figured it out. NIO, I suppose, a little bit, but not on a net basis, gross basis to some extent. But as we already talked about earlier in the live stream, you get some Chinese problems, Chinese economy problems. Okay, so Polestar. Let's get one of their SEC filings and just do a quick look, brief look. Usually we go deep into these things in course member live streams, but today we're gonna do a quick look at the latest annual filing for these folks, which was April 14th. And let's hop on over to that. Share screen with our good old handy dandy StreamYard here, mettkevin.com/StreamYard to learn more about that. All right. So what do we have? Here's Polestar's annual. So this is just going to take a hot minute to scroll down. All right, come on. I just want the statements. Sorry. It always takes a while to get down a annual report, especially these. All right, here we go. All right, so this is year ended. So what do we have? Oh, Polestar for the year ended 2022. We have revenue of $2.4 billion. We have costs of goods sold of $2.34 billion. So you have a gross margin at Polestar of 4.8%. And then you blew another $1.9 billion on... How do you blow $864 million on SG&A? Oh my God. They're blowing 6 times their R&D on selling. And you know what a lot of the manufacturers do is they put incentives into SG&A for people to buy the cars. So it's like handing somebody a stimulus check from your OPEX to go buy the car. This is not a profitable company. It's not a company making money. I mean, maybe they'll trend towards profitability, but not even Polestar can do it. Sure, BYD can pull it off. That's a good example. But they are also heavily subsidized by their hybrid and their ICE vehicle market. But I mean, you look pure EV. Oh, it is ugly out there. How many of these companies are just utterly failing. So it explains why. I mean, I hate to say it, but I know people like, the only thing you like is Tesla. I mean, obviously we know that's not true. I'm heavily exposed to chips and solar and energy since certainly November when I launched my fund, which was good timing. I mean, knock on wood, it's not always going to be that great, but can't make any guarantees, obviously. But it was good. But anyway, I mean, you just look at the competition. There is no competition right now. It's remarkable.